Facebook, Apple, that sort of thing. And so, yes, it's tracking that for right now. It hasn't fully matured. Once it fully matures, it'll start to have correlated properties of gold. But yeah, you cut rates, you're going to expand the breadth of equity leadership in the markets. If a rate cut goes into place, you'll certainly provide some relief in the real estate market, especially here in the United States.
Anthony Scaramucci, founder and managing partner of Skybridge Capital, an alternative asset manager and investment advisor, is very optimistic about Bitcoin, which has the largest market cap of all cryptocurrencies. Anthony, who used to be the communications director for the White House, sees Bitcoin as a possible way to protect against rising inflation and the U.S.'s huge $34 trillion national debt. In an interview with Benzinga in October, he stressed that Bitcoin is one of the few assets that is not affected by inflation or the central bank's rapid devaluation of fiat currencies. Anthony, who has put a lot of money into cryptocurrency, said, "If there is more demand for gold, we'll build more mines. Bitcoin has an end date." In a newer video with David Lin and Anthony, supply makes more connections between gold and Bitcoin. Even though both are often thought of as similar, they are worlds apart. Bitcoin is the most valuable digital currency in the world. It is also the basis of the digital revolution that is sweeping the global financial industry. Anthony is very optimistic about spot Bitcoin exchange-traded funds (ETFs), which he thinks will continue to attract the attention of institutional investors managing tens of trillions of dollars. He compares it to the SPDR Gold Trust ETF, pointing out how gold prices rose after it was approved and launched. Anthony thinks Bitcoin will follow a similar path and predicts that its price could reach $250,000 when Bitcoin ETFs secure $100 billion in investments. Now we'll show you clips from Anthony's latest interview with David Lin. But first, please like this video and subscribe to the channel.
Overly simplistic for your viewers and listeners, but I think that you have to start out with the following premise. In the digital world, would human beings accept a store of value in the digital world? And then the secondary argument is if, and the answer would be yes, if it followed all of the typical things that human beings have looked for store of value: scarcity, easy to use, trustworthy, where we can pass it between ourselves and know that the value stays stable. And so for 5,000 years, we used gold. A group of people, I think it was more than just one, Satoshi Nakamoto's computer programming team invented a coding system, a software where we could eventually have this decentralized database. And a result of this decentralized database, we could have a uh, link, if you will, to each other, permissionless. And so putting it very simply, I can spend money with you over this network without having to get a third party involved. And so those things are incredibly unique. It's an incredibly unique technology, and it was invented about 15 years ago. And as people started to adopt and understand the technology, it grew. I'm in the process of finishing up a book right now for John Wiley. It's called the Little Book of Bitcoin: What Wall Street already knows, but you need to know. And Wall Street's figured this out. They filed for these ETFs, and they're selling these ETFs as a potential additional store of value akin to gold. And so, yes, this is a nascent asset. It only has 5% adoption in the United States. If it continues to scale and adopt at the same speed of the last 10 years, there's no reason why this can't be a three, four, $500,000 asset. And so, putting into the context for your listeners and viewers, if gold's at $16 trillion, Bitcoin's at $1.5 trillion, could Bitcoin 10x in the next 15 years? I believe it can, and I believe it has the properties, the technical properties, to allow it to do that, and we're already seeing that happen. I think so, yes. I mean, right now, Bitcoin is still tracking like a technology asset. It's tracking NVIDIA. It's tracking what we've typically been calling the Magnificent Seven or the Super Six. These tech stocks like Amazon, Google, NVIDIA, Facebook, Apple, that sort of thing. And so, yes, it's tracking that for right now. It hasn't fully matured. Once it fully matures, it'll start to have correlated properties of gold. But yeah, you cut rates, you're going to expand the breadth of equity leadership in the markets. If a rate cut goes into place, you'll certainly provide some relief in the real estate market, especially here in the United States. And I have maintained that you're going to see at least three rate cuts from the Fed this year. There was about a 2 month period of time where Wall Street is now saying little to no rate cuts, lots of jawboning and moral suasion from the Fed in terms of what their inclinations are. But I don't really think they have a choice. So they'll cut rates. They don't want the economy to overly weaken. They're staring down the barrel of huge interest rate expenses here in the United States for U.S. debt, and inflation numbers are trending down. I would recommend to your people to please go to Trueflation, which is a website that aggregates the data for inflation. It's a decentralized data aggregator, and it's getting this data outside the traditional metrics used by the CPI. We think it's a way more accurate way to get the data. And they're saying that inflation right now, core inflation in the United States, is about 2.2%. The Fed is saying it's about 90 basis points higher than that. And if we're right and true inflation is right, they don't want to be too far behind the curve. And so I think you'll get successive rate cuts, probably starting in August of 25 basis points apiece going into the election.
During the interview with Lynn Scaramucci, Scaramucci talks about how politics are changing in the US, especially when it comes to cryptocurrencies and other digital assets in 2021. A well-known Bitcoin analyst named Willie made a prediction about Bitcoin on Twitter in the next 3 years, supporting Bitcoin will be political suicide as expected. This prediction got a lot of negative feedback. One of the many negative comments under the post said, "My man, you are really living in an echo chamber. For the next 3 years, supporting Bitcoin is political suicide for 50% of the population, and growing supporting Bitcoin is becoming the new smoking." Yet another poster said it would be at least 100 years before crypto became a major political issue. How off these estimates? Where Bitcoin and other cryptocurrencies have been backed by a number of US presidential candidates, including former President Donald Trump. Many people who support cryptocurrencies have said that politicians are finally understanding how strongly people feel about them. This is why Democrats who used to strongly dislike cryptocurrencies are now voting for crypto-friendly policies. People aren't just slightly interested in this trend, it's about financial freedom. And everyone who understands how serious the situation is will do everything they can to make sure their elected officials hear them and look out for their best interests.
There's definitely, listen, the Fed is supposedly an independent organization, but that ended in 1993, and I'll explain why. Alan Greenspan made a decision to raise rates going into the 1992 election. He was up for renomination. He was nominated by Ronald Reagan 5 years hence. He was nominated in 87. In 1992, he was raising rates. Uh, George Herbert Walker Bush did not want him to raise rates. He did it anyway. George Herbert Walker Bush lost the election. A lot of people blame that on a lot of factors, but one of the big factors was the Fed. And so you're probably too young to remember this, but in March of 1993 or February, during the State of the Union address, Bill Clinton's first State of the Union address, the guest of honor sitting next to the First Lady upstairs in the mezzanine was none other than Alan Greenspan. And right there, from that moment going forward, Fed has been a politicized and a political entity. And so I don't think they want to be overly influential in the election. I'm not saying that, but I do think that they're cutting rates coming into this election. Listen, there's no question Trump is going to have a more inflationary policy because he's talking about things. If you read Project 2025 or you read the Trump economic plan, you're talking about 20-ish% increase in tariffs in certain spots in the economy, 20% full-on tariffs with the Chinese. That's going to raise prices for the average consumer. Disposable income will get hit. We're talking about almost $2,000 per capita with a Trump tariff increase. And so that's inflationary. He's also, and this is a big problem with both of these candidates, frankly, they also like to spend a lot of money. Trump spent 7.8 trillion in deficit spending. Joe Biden over 8 trillion in deficit spending. They both have said that they will not discuss under any circumstances, the entitlement issues or any type of proposal to curb spending or curb the deficit. So there's inflation, more inflation with Trump. But having said that, this is something I'm a big believer in and why I think there'll be three rate cuts. You've got AI productivity gains, and you've got a recoupling of the supply chain with Asia. And so manufacturing's back, and manufacturing is back in spades. Increased supply will lead to lower prices. And I think that that's the natural consequence of all the technology in the marketplace now. So I think the red cuts rate, I don't think they get back to the 0% interest rates unless we have some kind of global calamity, but I think they get back to a couple hundred basis points below where we are now. 3 months ahead of me with his first Bitcoin buy. I think he bought Bitcoin late May of 2020. We bought our first Bitcoins in September, October, November. And I think he's a brilliant guy. I have probably more of a traditional investment style than Michael. Michael is all in one asset, Bitcoin. I put about 25% of our assets into Bitcoin, and it's grown. We're probably now at about 40. And again, it's not like we added any more money, David. It's just that the price of the asset's going up, and you sort of have the pizza slice expanding on the pie. If Bitcoin triples from here and I don't sell any, as an example, it's going to be 60% of our assets, and it won't.
Since cryptocurrencies are becoming more important in the election, more Democrats will vote for them even though they are not in the same party. As far as I can tell, Trump is using the issue to get as many new voters as possible, and it looks like he's succeeding. Some people aren't sure how much of an impact being a pro-crypto candidate will have, but it's clear that cryptocurrency investors are ready to do whatever it takes until politicians realize how bad the situation is. Please share your thoughts on Anthony Scaramucci's interview in the comments below, and don't forget to like, subscribe, and turn on post notifications for more videos like this. Thanks for showing up.